So let's find out what's going on with Access and the others with Mr. Ayodeji, Dr. Ayodeji Ebo. He's the managing director of Optimus by Afrinvest. Dr. Ebo, good morning. Welcome to the program.
Yeah, good morning, and it's great to be here.
So we see this results by Access Score, but we've seen interest on the stocks, mostly the bank Access Holdings, since last week. Tell us, what can we say from this, especially when we compare it to the same period last year?
Okay, yeah, thanks. And the first thing is to first of all look at it in detail. So if you look at it on the surface, you would see that on a looking at the bottom line, it's really down. And first thing, when you look at how to look at a business, whether it's growing, you first of all look at its top line. So, and you can see that for Access Bank, you would see that the top line also grew by about 15%. We look at gross earnings about 2.2 trillion. Yeah, so, but there are some major impacts when you look at the PAT, like you just highlighted, the PAT declined by close to 55%, and which was as a result of increase in impairment charges. So we saw impairment charges increase by about 87%, and that's to about 2.30 billion. That also impacted, and the tax expense too also increased by close to about 50%. So that impacted the profit after tax. And for the investors, for Nigeria, perception is also that interim dividend, when you look at the custom over the years that Access Bank pays interim dividend. So that also came as a surprise, though not totally as a surprise, because we're all aware of the new policy of the CBN based on the forbearance policy. And what we think that Access Bank have just done was to make almost like full provisions, which means that by the end of the year, we should be expectant that the bank would have been off the forbearance list and will be able to pay dividend. But by and large, when you look at volume wise, Access Bank still remain one of the most undervalued bank in the tier one banks. When you look at it based on price to book value at around 0.6, 0.7 times. So investors are currently trying to just position. I would always say, like when I advise people, you need patient capital to go into Access Bank, because what the bank strategically is doing now is expanding into different African countries, and it's going to be a medium to long-term benefit, because most of those assets will not immediately yield results instantly. So for banks, for those that understand how to identify undervalued stocks, they position now with patient capital, with the ability to benefit when we begin to extract the bank begins to extract value from some of the expansions that we have seen in recent years.
Mm. So, Dr. Ibo, when we look at results like this from the financial sector, um, we hear a lot of words, a lot of the use of the word resilience, even though that's mostly used for Africans and the Nigerian economy and all of that. But where do we see this resilience? And when we see where we are coming from, I mean, the FX last year was a major conversation of a lot of banks. Where do we see that resilience here?
Okay, I think the first thing that would see that banks, in terms of their resilience, is the ability to navigate the terrain. So last year, because of the FX that was volatile, banks like Access Bank positioned to benefit from the devaluation of the naira, which benefited them. And this year, when you also check their books, interest income increased significantly by close to about 30%, which means that they were able to also enjoy the high interest rate environment from the high interest rate environment. Last year, when you look at MPR, this year was around 27.5%, but last year was significantly lower than that. And interest rates was also, if you look at the first half of last year, was also almost in single digits. So the banks benefited from that. Also, when you look at income on loans, so the bank also recorded significant increase in income on loans, which is also very positive. So, but by and large, that resilience is the ability to identify the opportunity and meet the challenges. Most of the banks have continued to push forward, and you would see that for most of them, even in periods when we have a lot of volatility and uncertainty, they tend to even do better in periods when things look very stable.
Mm. And all of this, we're heading to the end of the recap exercise. It's a couple of months now. We hear a lot of results of the banks. This bank has met up with the requirement and all of that. I guess we are moving boldly in confidence towards the end of that recap exercise.
Yes, as we approach the end of the year, like this week towards next week, we'll be expecting the third quarter result of most of the banks. We've seen a few banks like EcoBank, Stanbic publish their own, and it's been positive. So, and we believe that a lot of the other banks will also follow that path. But one thing that we will also be on the lookout for is the increase in impairment charges as a result of the new CBN rule for banks that intends to pay dividend, that they should make full provisions for whatever loans so that they can be removed from the forbearance list. So we'll see that, but we still by and large is that there will continue to be opportunities, as the economy also grows, as stability and we see certainty in the economy. Businesses would also need to also borrow to grow, and the banks will also be a bit more comfortable to also extend loans as they see economy is growing. So I think it's really positive. And if you recall, most of the banks have also raised capital this year. So which means that that's enough fund for expansion and for more businesses in the coming year. So I would want to just highlight that compared to what we've seen the last few weeks, non-financial stocks have really done well. The banks have just remained a bit stagnant. But for those that have that long-term investment horizon, then it's the opportunity for them to take advantage of that when things look like it's really very stable. Ahead of the full year dividend, most of the banks would want to at least impress investors with their full year dividend based on their 9 month performance would be what would tell us what we should expect by full year.
Mm. And for a bank like Access and the others, we've seen the transformation from monoline commercial bank to diversified financial holdings. I guess that is also giving them an edge.
Yes, I think that, yes, it's positive. Like I said, in the medium to long term, that diversification will begin to enjoy the benefits. So, and it's investors that key into that vision now that will benefit long term. Because when you look at, they've just acquired in recent years in Mauritius, lent that in Kenya just paid for about 179 billion, paid for a bank acquisition of a bank. All those income from those are also going to be foreign currency based, because of by the time you are translating it to also naira would also be positive. So beyond just naira based revenue, also getting revenue from other businesses now as a holdco would help diversify. We are seeing it in some of the top banks that because of that diversification, it helps to create sustainability, because what investors need to look at is the sustainability. Then Access Bank, one thing that I think that would also jumpstart in terms of perception and valuation is the efficiency ratio. The cost to income ratio still remain high, but I know that with over time, with the acquisitions that have been done and they begin to yield results, that will also, as revenue grows significantly, we don't expect cost to increase at the same pace. And as such, that would also make the bank more efficient, and valuation wise, investors will be able to place more premium on the bank.
Yeah, but Mr. Ibo, in spite of this positive outlook, um, since last week or most of last week and the beginning of this week, we've seen banking stocks in the negative, profit taking still going on. Can we understand the relationship between these two, optimism and yet profit taking?
Okay, yeah. So what we saw even from yesterday is sector rotation, which sometimes. So when you see a sector, non-financials have been moving, have been performing well, likes of Dangote, MTN, Aradel. So investors will temporarily sell down on areas where they feel that they can come back into, especially the banking sector, that they are not expecting much in this period to benefit from that upside and later on take profit from the non-financials and come back. So what we're seeing is sector rotation, which is also normal investment for savvy investors. They rotate from sectors that has greater potential. But for banking, I've said it's medium to long term. If you don't have long-term capital, you don't. It's not advisable to invest now. It's for patient capital. It's rewarding because when you look at it based on capital base alone, they have more capital to play with, and that would also mean more revenue in the new year. So that's part of what is happening within the stock market.
Dr. Ebo, thank you so much for that explanation, the sector rotation. I think it just looks like what's going on at this time because we've seen a lot of activities around Dangote cement, and then we know that banking is one of the favorite sectors yet at the NGX. So thank you so much for sharing your knowledge with us this morning.
Always my pleasure. Thank you for having me.